this is fun. There it is. Okay, looking good. Stick it right behind that one. Brandon's here. Brandon, what's happening? Our Botco. Cool beans. Well, who is that? Houdini? Did that say Houdini on it? It did. Houdini, what's happening? Sean, how's it going? Just getting started. Good evening, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. What's with the spray tan comments lately? I have no idea what that's supposed to mean. Kids at school. In high school, everybody hated me. Well, a lot of people hated me. I just go outside and I get a nice tan. It's just, it is what it is. Alright, so as I was saying, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, take you along for the ride for a safe, predictable, and consistent 1% per week. Now, thank you kindly there, Doctor. Dr. Chapman. Cool beans. Evening there. Yeah, good evening. Doc's here. Woohoo! Alright, I got two doctors here. Cool beans. Doc Botox and Dr. Chapman. Alright, let's get started. It was an interesting week. Seriously, because I was getting a little nervous there on Thursday when I saw nothing was in the money. Uh-oh. Thank you kindly. Not bad for 60, I must say. Anyway, let's take a look at what we're looking at. Someone else look at Alibaba. Alibaba. Alright, we wrote it down. We'll take a gander at it. Cool beans. Alright. That's funny, thanks. Alright. So, officially the end of week number 8. Or week number 34. Depends on how you look at it. It's week number 8 for the third quarter. It's week number 34 for the year. There's only 52 weeks in a year, and there's only 13 weeks in a quarter. We just finished week number 8. So here comes week number 9 next week. So let's see what happens. Sorry, you're looking for more on topic followers. That's okay. We're just getting started, just getting warmed up. We're just getting warmed up, so let's keep going. Okay, first thing on the list today. Who wants to pick something first? Or should we go through the disclaimers first while you guys are getting warmed up? Mark wants to take a look at Macy's. Macy's is already on the list, Mark. That's like halfway down on the list for today. Now, let's go over the disclaimers. Get them done and out of the way. Save everybody some aggravation, whatnot. First of all, number one, hey, Barry, you're going to have to give me, Doc, why do you want to look at Walmart? Walmart's not in the play this week. WMT. Okay. I'd save you some age. Thanks. Some aggravation. Thanks. Alright, who else? MNA Graphic. Cool. MNA Graphic. I have no idea what that is. Alright. So, let's get the what do you call those thingies? The disclaimers out of the way. Alright, number one. I am not a professional anything. I might be a professional pain in the ass, as most people like to say. So, that being said, I don't have any licenses other than the license to drive a car or a motorcycle or a truck. That's it. I'm not a financial advisor. I'm not a money manager. I'm not a stockbroker. I am basically your average everyday neighbor, the guy down the street, 3 streets across. I don't know, however you want to categorize it. But I don't have any formal training in this whatsoever. I took the path, I was going to say less traveled, but nope. I took the path most traveled. That's where people try it, they lose. They try it, they lose. They try it, they lose. Until you get to a point where it's like, Oh, this works great. Well, what is this? Well, this is something my 9-year-old daughter. It would be my 9-year-old daughter when she said in 2008, okay, Daddy, can I do that too? Can you teach me? So I said, sure. So for 9 years old, I had to create a trading strategy specific for her. Pakaris, what's happening? All right, Doc, you're getting a little carried away now. So my 9-year-old daughter says, Daddy, can you teach me how to do that? Okay, so for a 9-year-old, it has to be simple, safe, predictable, consistent, and no way that she could lose. Because we all know if a 9-year-old little girl loses money, she's going to start crying. I'm going to feel like crap. Mama gets involved, and then that couch is not as comfortable as I once thought it was. Anyway, all that being said, 5 rules came along with that. Rule number 1, never buy something you do not understand. Okay, if you don't understand it, you can't give a 10, 15 second elevated pitch as to why you bought it, what's your exit, what's your exit. Okay, if you can't figure that out, don't buy it. Never buy something you do not understand. Never sell at a loss. Make sure the company's consistently profitable. I like 20 years. Sorry to interrupt my speech, thank you. Make sure it has consistent increasing in their profits. Now, I like to look at the dividends. Now, a dividend is the portion of the profits paid to the investors. That's you and me. Once we invest in stocks, we become the investors. So, if the dividends consistently increase year after year after year, okay, I like 20 years, okay, if they continue to increase, then more than likely the company's continuously profitable. Once they start cutting dividends, that's the first sign of issues with the company. All right. That being said, never buy something you don't want. Never buy something you don't understand. Never sell at a loss. I like 20 years of increased dividends. You guys can figure out what you like. Okay, weekly options are a must. And the reason why, because it's it's dividend investing for weekly cash flow. The only way you're going to get weekly cash flow is to have something that trades on a weekly basis. Well, stock options trade on a weekly basis. So I'm looking at stock options. Okay, you have your calls and your puts. I don't deal with the puts. They're a little bit more confusing, so to speak. Are you in TT jail or just have been on? I just got here, Tammy. Just got online. Okay, so we're just getting started. What was I saying? I get distracted easily. It's funny. All right, so that being said, simple, predictable, consistent, all that kind of nice stuff. So the 5 rules. Weekly options, yes. Make sure I have weekly options. That was rule number 4. Rule number 5 is make sure the numbers work. And what do I mean by the numbers? Well, those are simple. What am I buying it for? What can I sell a covered call for? Because we're using covered calls. And is that right? 32? Let's reboot. That's crazy. We're going to reboot real quick. 32 just doesn't cut it for me. So don't go anywhere. I'll be right back. Come on. There it is. Well, now you guys that are still here, okay, give me a second because only 31 people on. Come on, there we go.
Full of shit. At least Donald Trump is.
And there we go. Let's try this one more time. Okay, one more time. If we try one more time for all the old time. All right, we're going to give this a try one more time. Okay, 31 is just ridiculous. Get a reboot. Maybe get another pop in the volume. Who knows? That being said, Billion. Hey, Billion just joined. How are you doing over there? So just getting warmed up. All right. So we're going to look at the very first stock of the day. Corazon. What is that? Corazonito. Interesting. Geo, what's happening? Tompe. Cool. Good name. Bomber Redneck. What's happening, brother? All right. I had a reboot. I had a low count. I have to do that every once in a while. Let's just get started. Jump right on in. And the first one we're going to look at. De Charlo, ¿qué pasa, amigo? How are you today? First one we're going to look at today is going to be Visa. Visa, we all love Visa, especially because Visa keeps paying nice premiums. All right, as always, very first thing I always want to take a look at is what is the high, the low, where was it, where is it, what direction is it going? Cool. Once I see that, then I want to jump in and take a look at the numbers. What am I paying for it? Now, you may or may not know a dividend is a portion of the profits that's paid out to the investors. So I use those as a signal to when to jump in and actually buy the stock. See these little green dots? They represent the EX date. EX date is just the last day they trade before they pay their dividend. That gives me an indication as to when are when are they paying their dividend. So when they pay their dividend, the stock has a tendency to go up in value just before the dividend. Each one of these green dots is a dividend of a company that I personally like. All right, let's get back to where we were. So Visa for, wait a minute, this one expired today, so that one's no good. This one right here, here we go. Visa at this moment in time. How you doing? Fran Gomez, how are you today? Cowboys 9. How you doing? Cool beans. All right. If I'm buying it for 267 and the 267.50s are going for 217 to 233, that's close to 1%. I don't know if you can get much closer to that. What is that, 0.95 or something? But here's the question. Do I like Visa? And do I like Visa at this current price? That's a question I got to take into consideration. Okay, so a year ago, Visa's at 241, bottoms out at 227. Tops it off at 291. Now from 291, that was back in the end of March. Okay, so the last few weeks, here we go, the last 30 days, take a look at that. Here we are up here at 268, gaps down and hits the bottom right here at 253. Shoots up, pulls back, shoots up. Now she looks like she topped out yesterday. So more than likely going to come to the downside. So I'm going to put Visa on the list for 2 weeks from today. Wait a minute, not next week, the week after. Here we go, Visa. Alright. And the reason why I'm doing that, if you take a look at the chart and then you predict the movement of the company week after, if any. Yeah, Jamie, I see what you mean. Because look, it took about a little over a week to do that uptrend. Okay, it took 2 days to get down. From here, it took another 2 weeks to get to this uptrend. See, she went up, and she paused, and she went up again. So she looks like a week and a half each time to move. So when she's coming back down, I'm figuring 3, 4, 5 days. That takes up all of next week, so the week after more than likely. Jamie, you're right, you know, the week after. All right, that was Visa. JWN, Nordstrom's. Who likes some SDIV? Curtis, what's SDIV? SDIV. Now, I've never heard of them. So usually, if there's something I've never heard of, there's a good possibility it's not going to fit into the inner workings of this strategy. So SDIV, let me pull it up. SDIV. Yeah, you got to be new here, Curtis, because see, this is what you call a monthly optionable stock. Now, I'm not sure if you're familiar with options, but a stock option is a call option and there's a put option. Now, I'm not going to talk about the put options because they can get a little confusing. They can. Now, I'm going to be looking at the call option. The call option allows me to sell my rights of the stock that I own. So if I want to do a covered call, I have to buy the stock first and then sell the options against it. So if I'm buying this stock here at $22.46, great. Now I have the opportunity. Yes, you can, Doc. You just got to let me know. DM me with your number. I'll give you a buzz. We'll set it up. Cool beans. So that being said, this is the price right here. Everything you want to know about the stock is going to be up the top. Last price, the opening, the high, the low, the volume, the bid, the ask, the close, All that is up there on the stock. Now, what's underneath that? Well, these are the option chains. If I want to look at the option chain, I click on here. Now we're looking at the month of September's option. Well, that's the next option that's coming up. And right now, 22.46, the closest one is going to be 22. And it's going for 40 cents. Well, if I'm losing 46 cents right off the top, well, that's not going to work. The 23 is going for 0. Well, that's even worse. So why would I do? See, I've always say this, and some people just don't get it. Monthly options, for me, don't fit into my equation because the numbers don't work. Because if you take a look at this number, that's what I buy it for, this is what I sell it for, this is what I collect. Great. Now, I got to divide it by 4 because I'm holding it for 4 weeks. Okay, and if I miss it, I got to hold it for another 4 weeks. Okay, Mark, we're going to take a look at Walgreens. Let me write it down. WBA. It's already written down, Mark. It's already on the list. DHT. DHT. Never heard of DHT. CVS. CVS. Well, let's take a look at CVS. I think I sold my CVS today. Hold that thought. Uh-oh. Attempt to reconnect. Damn it. Attempt to reconnect. Double damn it. That's gotta suck. So we have the one thing I dislike about Thinkorswim is that Friday afternoon or Friday evening they like to do their updates, and while they're doing their updates, I get limited access to the service. So we're going to see if we can take a look at that because I do have, reconnecting. Damn it! So I can only show you one account at the moment. Give me a little bit, and we'll get to those other ones. But I do believe I sold my CVS for the week. All right, next on our list. Check it out. Walgreens is next on the list. WBA. There you have it. Now I actually have some Walgreens WBA. Okay. The options I sold expired worthless this week. Great. That means I made money, and then I'm back into all my positions for next week, so I get to do it again next week. It's kind of nice because once you buy the stock, you own it until you sell it, or you have it called away from you. They call it being exercised. So if I own a stock, so hypothetically you can see right here, I have 1,600 shares of Walgreens, and my price is at 12. Okay, well, as you can clearly see, it's not even close to 12. Okay, here we are down here at $10.30. Where's 12? Well, 12 just so happens to be way up there. I can't even reach it so far up. Okay, right now, this is where the stock price is now. You gotta excuse me, I'm not used to talking so much. It's kind of weird because I talk like 3 hours a day, non-stop. I'm not talking to someone, I feel like I'm talking at someone. So, my throat's not used to all this talking. Hence the hot toddies and the lemon and the honey and all that kind of stuff. Anyway, let's get back to what we're talking about. Ron, Macy's. We'll take a look at Macy's. MJ. What is MJ? Macy's. MJ. Okay. So, let's continue. So, Walgreens, as I was saying, we're down here, 1030. So if I wanted to buy it, if I didn't already own it and I wanted to buy it, well, look at the numbers, 1032. The 1050 is going for 12 cents. That's over 1%. And if it goes above 1050 by next Friday, which is right here, that's easy to do. If it goes above 1050, not only do I keep this, but I get to keep an additional 18 cents per share. So that bumps it up to 30 cents per share. And 30 cents per share on a $10 stock, that's almost 3% if it stays above 1050. Now look, here's your 30-day high. Here's your 30-day bottom. Well, what happens after a 30-day bottom? We all know that after a 30-day bottom, she starts to go back up again. Well, great, it's Walgreens. And guess what? Because you guys, you may or may not know this, some of you, WBA. Oh, come on. It showed up earlier today. I'm pretty sure Walgreens has its dividend not next week, but the week after. I believe it's on the 13th. It showed it on the 13th on the other counts. All right. That being said, we'll have to wait. But yeah, I'm pretty sure Walgreens has its dividend next week. Strong red candles, green candles. Is the reds, it's a inside candle, and it will continue the down pair. I'm not quite sure if I agree with you or not. We'll see what happens. Here is, at this moment in time, the current 30-day bottom. Here is the previous 30-day bottom. Look what happened over here. Red, then a green day, then it kept going up. Oh, what do we have now? Look, 1 red, 2 red, green. 1 red, 2 red, green. So it's hypothetically speaking, could be a repeating pattern. I don't know. Let's take a look. Rosetta, do you have any options on Kava stock? It's been doing good. Now, I'm pretty sure Kava stock is not on the list. Let's take a look at Kava. C-A-V-A. And there's a reason why, most likely. Okay, and here's the reason why, Rosetta. There are no dividends in the selected time period for Kava. So Kava is basically a no. 821. Walgreens had a dividend on 821. Oh, imagine. Holy cow. So I'm going to get nice fat dividends from Walgreens. Okay, so Walgreens dividends right here. Well, alrighty then. The 21st. Interesting. Okay. Alright. If it breaks above, it'll change the trend, but it's just making lower lows seems risky, to be honest. Okay, just my opinion. Okay, and all the mouse. And now my mouse? Okay, anyway. That being said, here's my argument about Walgreens. Number one, Walgreens has been around for over 100 years. That's number one. Okay. Number two, Walgreens has, before the current administration came into play, had increasing dividends consistently until just the last 3.5 years. Imagine that. Anyway, but that being aside, it has 8,700 stores. That's a lot of stores. Personally, would you consider non-div stock if premiums are 5%? Sometimes yes, sometimes no. It all depends on the stock. Okay, some stocks just deserve to have some respect, and some of them don't. And what I mean by that? Well, if it's a household name, well, great. If it is consistently profitable, also great. But if they don't pay dividends, that means I have to go and read all the earnings reports and find out how consistently are they profitable. So that's involving some homework. And I'm not afraid of it, but do I really want to? But it's got to have weekly options. That's a must. There's no other way around that one. Okay, because I'm not sitting there watching charts all day long, looking for breakouts, looking for, what do you call these things, signals to tell me when to jump in. Yeah, no. I like simple, safe, predictable. Got it? Good. Now, I like to, preferably, EBS, no dividend but crazy premium. Yes, we looked at that yesterday. Rich, EBS. EBS. Okay, now we looked at this one yesterday. Look at the pattern it's got going. Okay, here's your high, here's your low. She goes to the upside. You have a gap down here. Well, that gap filled. Well, now you have a gap up. Well, that gap is going to fill. This baby's coming down in the next couple of days. If you really like it, well, right now it's at 9.53. Okay, the 9 is going for $1.05. You lose 65 cents out of that, and you're walking away with what, 40 cents? Here, you're better off with the 10, because the 10 is going for 60 cents. That's a nice premium if you like that stock. And I've never heard of the company, so I usually don't jump into companies I've never heard of. Rich, they make Narcan. I have no idea what Narcan is, and I feel bad about that. Larissa made this. If I bought a stock on the EX date, will I get a dividend? Actually, you got to buy it before the EX date. Tom Pay, with your system, will you buy a stock if the dividend is coming up during the trading week? I'd like to buy it 2 weeks before the dividend. Because you got to remember, people buying stocks specifically for the dividends, and trust me, there are plenty of people out there that just want to collect dividends. Each one of these dots represents a dividend date, or the EX date. If you wanted to collect the dividend for Johnson & Johnson right here, you'd have to buy it on the 26th, the 19th, 22nd, the 6th, the 8th, the 1st, any date before this date. Uh-oh. I missed some questions. Missed some questions over here on YouTube. RUTT, nope. Or just have been on. Oh. PVL is decent. PVL. That's a no. Sorry. As you examine these stocks for us, we should consider when the dividend date is. Well, Tom Powell, I'm going to agree with you 100%. TK. No, it's not. Uh-oh. Narcan saves people from overdosing. Oh, wow. I have different emotions on that one. I'm going to leave that one alone. Are the volume of stocks traded go up significantly on Monday, Tuesday, Friday compared to Thursday to Friday? That's an interesting question. And to be 100% honest with you, I've never even thought of asking that question. Okay, because if you take a look at the stock chart, here we go, charts. Okay, here's the chart here. Okay, that gives you from a year ago to today. So way over there is a year ago, and way over here is today. Down here gives you the volume. Okay, now if I want to zoom in and check a look at the volume, hey, the lines, what's happening? Okay, if I want to zoom in and take a look at the volume, all these blue lines down here, this thing moves around a lot. Look, low here, medium, high, medium, 3/4 medium, high, medium, medium. It's anyway. No, I've never looked at volume as being an indicator. Is this a Schwab account? Yes, it is. Monday volume and movement can determine a good bit. Yes, it can. How do you know if a stock will pay a dividend or not? That's an interesting question there, Michael. Ryle Ogan? Is that Ria? Ria Ogan. Sorry, over there on YouTube. How you doing? Well, the interesting thing about finding out if a company has a dividend or not, first you got to find out a good strategy you like. The strategy I like has to do with dividends. So the simplest way of figuring that out, okay, Michael, is I go straight to the, what do you call it? Straight to the horse's mouth, so to speak. Okay, so if I'm looking for a good dividend stock, well, there are people out there that keep track of dividend stocks. Yeah, Gallant, you saw that one? That's pretty good. So there are people that keep track of these stocks, and that's all they do. Well, let's take a look at some of them. Okay, they have lists and they have really cool names. So you have the Dividend Kings. Now, it is a category, all right, of a handful of stocks. I believe there's 54, 57. 54 companies that that have increased their dividends for more than 5 decades. That's 50 years. That's one way of finding out the list. And then you have another list, the Dividend Aristocrats, 25 years of increased dividends. The Dividend Champions, again, 25 years of increased dividends, a little bit less rules, but there's 150 of them. Okay, and then you also have the Dividend Contenders. There's 300 of those. Yes, 10 years to 24 years of increased dividends. So finding who pays a good dividend, that part's not that difficult because there are people out there tracking it, and they track how consistent are all the companies with their dividend increases. Okay, which direction are they going? Are they going higher or are they going lower? You know what? We haven't done this in a couple of weeks, so let's do this real quick. Let's run on over to FinViz, because we like FinViz. Oh, it's horrible shit. All right. This here is called FinViz, Financial Visualization website. Okay, FINVIZ. Really cool stuff there. When I get to that in a second, let me read some of these questions. Strong money indicators can say two options. It can go up for the week or it can go down for the week. Yeah, okay. How do you know if a stock will pay a dividend or not? Okay, Mike, we already talked about that. 8 more questions. Uh-oh. Do you use the dividend to incentivize? Uh-oh. Uh-oh. I missed the question. Do you use the dividend to incentivize the completion of the call? No, not at all. I use the covered call to collect the premium. I'm not really interested in the dividend itself. Chris, over $5 billion net purchased by institutions on the capital capitulation. They won't be holding for crumbs. All right, Chris, I'm not 100% sure what you mean by that, but all right. Need more of this on TikTok. Okay. Nulo? Yeah, I'm not even going to bother with O. What is the name of the monitor, please? I had a great trading week. So did I. The monitor? An LG. Isn't that Life's Good? Yeah, LG monitor. Anyway. Oh, so here we are. This is FinViz. So if you want to find out if a company has a dividend or not, right here, see it? It says dividend yield, any. Well, if you click on that, see, right at this moment in time, I stand corrected. There are 9,606 companies now. Okay, so they added a few more companies over the last week. 9,000, so did I. Alrighty. Alright, so 9,606 companies available any day of the week. So, here we go. If we come up to the dividend yield, click on that little box right there. Alright, now, this is going to eliminate quite a bit. No dividends, a positive dividend, okay, a high dividend over 5%, very high dividend over 10% yield, okay, then you get over 1%, 2%, 3%, that's in custom elite only. But anyway, you can actually pick what kind of a yield you're looking for on the dividend stocks you're looking at. So let's say I go something moderate, 2%. Well, now out of that 9,606 companies, there's only 3,305 that actually have dividend yields over 2%. All right, we don't need that. We don't need that. Now let's go back to here. All right, so that being said, that's how we check and see if there's dividends or not. Okay, so PVL is going to be a no. Hey, Tom Powell? Altria, really? We looked at Altria earlier during the week, and it was a no because the numbers weren't looking that great. Okay? Yeah. Here's where we're saying no to Altria. It's at the high of the year. Okay? I don't like buying at the high of the year because now I'm going into territory where it's never been before. Okay? So now this is why the first thing I look at is the chart. Where's the high? Where's the low? I don't want to be at the high of the year, because then you're looking to go higher and there's no guarantee. It's like standing on a ladder waiting for someone to bring you a taller ladder. It just doesn't make sense to me. Okay, you're going to make your money in the stock market buying low and selling high. not buying high and waiting for it to go higher. Can I sell covered calls for more than I paid? Yeah. Tom Pay wants to look at that. I guess those are gone, kind of on the weird on the monthly. Okay. Well, L3 is going to be a no. 52.50 is what it's at the moment. The 53s go for 15. Yeah, no thanks. The 52.66. Once you start doing the math, it's not going to be worth it either. The premium's just not good at all. Now, not all the time. Don't forget to look at CVS. Black Gold. Ooh, Black Gold Texas tea. Well, the first thing you know, Jed's a millionaire. I don't know how many people can remember where that came from. How close to the high of the year is too high? All right. Jerry, when I'm looking at a chart right here, okay, here's the last 30 days. Okay, here's the last 30 days right here. Then she went up, pulled back, went up, pulled back, and then she just shot right on up. Okay? I like to be closer to the bottom. See, here's the bottom. Let me change sides. Here's the bottom over here. Alright? Bottom's right here for the 30-day period. And then she just shoots right up. So the high is there and the bottom's here. Well, somewhere in the middle would be where I would like to be. Because you got to take into consideration, what are we, meaning you, the buyers and sellers, what are we thinking? Okay, well, we're thinking this thing is worth more than it is at the moment. And it's going to keep on going up until it's done. The funny thing is, you never know when it's done. I bought Apple at an all-time high in 2012. Well, I don't like to buy high at all. What additional filters do you use screening for dividend stocks on FinViz? Oh, Charles, that's pretty easy. Uh-oh. That means I have to go back to FinViz. Okay, first thing I want to do is dividends. I want to click on that. At least have a 2 or 3% yield, make it halfway decent. Okay, then I want to go over to the other side and click on, well, not the ad, of course. Click on the options. Okay, that will tell me if it has options. No, we did not do Alibaba yet. Now, the only thing I don't like is the fact that all these stocks that are optionable, it doesn't tell me whether they're weeklies or monthlies. But finding out if they're weekly or monthly is really not that difficult. Pretty quick once you put the stock symbol into the allotted space. Once you put it there, pops up. 23 August, that's today. 30 August, that's next Friday. 6 September, that's the Friday after, the Friday after, Friday after, Friday after, so on and so forth. If it was a monthly optional stock, it would be just monthlies, not weeklies. We're in an AI bubble. Okay. I appreciate that. Thank you very much. Now, that's MO, Altria. So let's go on to the next one where you see those numbers. Where do I see what numbers? These numbers right here. Is that what numbers you're talking about? I'm not quite sure. Anyway. Allotted space. Big words. Did you like that one? Wait, well, what do you call it? This is where it goes right here. It's a space in which it goes. It's the allotted space for that. Okay, Ron wants to look at Macy's. What would you say your number one stock that you hold? All right, Bill, you're under the misconception I hold on to anything. I don't. I am extremely non-monogamous when it comes to dividend stocks. I buy a stock, I sell it as soon as it hits my target. What do I think about TEMP? TEMP. But if you're curious, okay, TEMP is going to be a no. Look at it. It's really choppy. There's no There's nothing you can predict with it, and it has no options at all, so that's going to be a no. Sorry. So let's jump on to Macy's. So Macy's is on the list. And here we go with Macy's. Macy's had a nice day today. If they cut their rates, things will drop. I cheated on CMG. Okay. Sherry Baker, how are you? Now, let's continue taking a look at Macy's. Now, Macy's has been around for over 100 years, and I'm pretty damn sure everybody here has heard of Macy's. Now, Macy's has been up and down quite a bit this year. They've had, 3 or 4 contract, negotiations for takeovers. How about a look at Toast point of sale? Toast, I never even heard of Toast. Okay, let's keep on looking. We're at Macy's. Okay, here's the high, here's the low, and where it was, here's what it is. Look at that update it had today. So let's zoom on into that. Take a look at the last 30 days. Here we go. Predictable movement. Look at it. It went up, it came down. It went up, it came down. Now it's going back to the upside. It's basically your elementary school teeter-totter. It goes up, it goes down, up, down. Puts on Macy's, well, have luck with that one. Okay, because if you take a look, what has Macy's been doing? Up, down, up, down. And any advantages of trading options with dividend stocks as opposed to just buying dividend stocks? Yeah, Charles, that's a good question. It's always, always, always going to come out to what is your plan? What is your strategy? What are you trying to do? Now, most people will say, I'm trying to invest to make money. Well, great. Well, invest to make money. I'm investing for a safe, predictable, consistent 1% per week. Now, I came up with a strategy for my 9-year-old daughter back in 2008 when she wanted to learn how to trade. Now, I was trading for about 5 years back then, some good, some bad, but she wanted to do the same thing. So I had to come up with a strategy specifically for her. Charlo, do any of your books have definitions of important stock trading nomenclature? I have no idea what nomenclature. I told you I didn't go to college. I don't know what that word is. Past performance isn't an indicator of future performance. Well, you're absolutely correct. But I got a question for you. All right? Okay? User 53035, whatever. You're absolutely right. Past performance is not an indicator of future performance. But here's a question I got for you. If Weight Watchers stock goes up the first week of January every year for the past 15 to 20 years, is that valuable information? Or what about Google? Google has a tendency to go down for the first quarter, I think it is. Or is it the first week of January? Naming convention. I have no idea what context we're using that in. Let me finish up about past performance. So if a stock, because the stocks that I'm looking at, if a stock has a tendency to consistently go up in value before the EX date, which is the last day the stock trades before the dividends paid out, if every year for 10 years in a row a stock goes up before a certain date, would it be safe to say there's a good possibility or probability that it will do the exact same thing? Okay, if something is repeatable, if something is consistent, and it happens like clockwork. He's asking for trading terms. I have no idea what that trading term is. Naming convention. I have no idea what that means. I need to have it used in context. Okay, I didn't go to college. I got no problem whatsoever. That word I've never heard of. So, I don't know. I can't answer the question. Oh, that's horrible. Yes. Good week overall, but needed to roll many stocks. Secretariat, good. That'll just make me mostly a spectator next week. If you trade based on patterns, you're going to have a bad time. All right, what was this? Same person? Yeah, 530353, whatever. Okay. Okay, we're all entitled to our own opinions. You know, I've been doing this successfully for 15 years, so, you know, agree to disagree. Okay, if I see a stock that continuously moves up in the first week of February, well, yeah, I'm going to jump on that, take advantage of it. Now, if stocks have a tendency to go up 10 days or 2 weeks before every EX date, Jenny, how are you? Sammy, what about Hershey? We'll take a look at that one also. If a stock has a tendency to go up in value every year, but consistently for 10 years or more, based on when they pay their dividend. Because if you look at the dividends dates, okay, dividend dates, let's pull up Warren Buffett's list. Okay, here's Warren Buffett's list. Okay, now let's rattle off a few. Now, first of all, this says August 2024. All right, Ally Bank, Aon, DHI, Siri, Visa, Wells Fargo, Moody's, Heineken Payne, Kroger, Capital One Finance, Apple, so on and so forth. Now, repeatable patterns. Are you ready? Let's go back a whole year. August 2023. Come on. Okay. Ally Bank, Aon, ATBI, okay, that wasn't there before. Wells Fargo, Capital One Finance, DHR, UPS, Jefferies, Apples, Visa, Louisiana Pacific, Siri, Kroger, Heineken Payne, Chevron, Moody's, the exact same list a year ago. That's a repeatable pattern. Let's go back one more year, 2022. Do you DCA if you are in it higher? Ron, I DCA if the numbers work. I'm strictly a numbers guy. Now look, this is just to debunk what somebody said. Repeatable patterns. DHI, Siri, Wells Fargo, Apple, Capital One Finance, UPS, Kroger, Jefferies, Visa, Heineken Payne, Louisiana Pacific, Chevron, Moody's, so on and so forth. That was 3 years ago. Wait a minute. Yeah, this year, last year, the year before. I could keep going back further and further and further if I wanted to. But some of these companies have consistently increased their dividends for more than, 25, 30 years. Nope, 26 is too far. There we go. Okay, so if I'm looking at companies that consistently increase their dividends for 20 consecutive years, well, it means that these are going to be the exact same for 20 years. Every quarter, every 90 days for 20 consecutive years. That's a repeatable pattern. So you're telling me if I do a repeatable pattern, I'm going to lose. I'm going to have to disagree with you. Do I DCA? Ron, I dollar cost average when the numbers sound like they are a good idea. Okay, it's because the stock is going down. It doesn't mean that dollar cost averaging is a wise idea. It always comes down to the numbers. Rich Bruner. Hey, you made 17 grand this week in premiums using the strategy. Well, hey, Rich, where's my cut, dude? Anyway, what about Hershey's? Let's take a look at Hershey's. Jenny, pleased to meet you too. Hershey's. Now, Hershey's is another one of those companies I very rarely buy, only because the premiums really aren't that great. Look, if I'm buying it at 196.68, the 197 is going for 135. It's not quite 1%. That doesn't mean I don't like Hershey's. I love Hershey's. Hershey's is one of those repeatable patterns. It goes up the first week of February every year. Well, why do you think that is? Well, what happens in the second week of February? Valentine's Day. What happens in the what was the last week of April? Easter, the two biggest chocolate days of the year. Okay, February, March, April. So you have in the first week of February, Hershey stock goes up. But is it a good deal this time? At this moment, no. 196, the 197 is going for 135. That's not 1%. Now I like 1%. Rich Bruner. Missing some of these questions. Yeah, bam, way to go. What is your percentage? 1.4. Oh, Rich, that's good. 1.4. Well said. Thank you, Charles. So the strategy is to buy the dividend stock that goes up just before the exhibit. Charles, you're almost there. You're very close. You are right. You are 100% right with what you said, but you have one more step. You buy the stock before the EX date, preferably 2 weeks. And then you sell a covered call against your position to collect a premium. Okay, now premium most of the time is 1% or more. Sometimes it's more, sometimes it's less. In this particular situation, Hershey stocks is less than 1%. Let's find out exactly what it is. Okay, find my calculator. Now, to find out what your rate of return is, relatively simple. What's your profit? Well, when I say I like safe, predictable, and consistent, okay, simple, safe, predictable, consistent. Now, predictable and consistent, well, the dividends are consistent. The dividends are predictable. So what am I looking for? I'm looking for, what am I selling it for? Okay, I buy it that, sell it here, I collect this as my premium or my profit, and then I really don't care what happens after that. I would prefer the stock to stay where it is or go up. That's why I like to look at the charts, because the chart tells me what the buyers and sellers are doing, and that's you and me. Okay, you and I, we create this mess back here, the highs and the lows. The only number that's controlled is the opening of the day. The opening price of the day is controlled by the market maker. He basically says, this is where we're starting from today. So let's continue. Companies control their dividend payouts. They don't control their stock price. User 53, you're 100% correct. Okay? The stock price is controlled by mainly the public, that's you and me, and the market maker. Okay, the market maker, he just decides what we're going to open the stock price at for the day. We, you and me, the buyers and sellers, we decide what is too high and we decide what is too low. And we go from there. Okay, it's kind of like the stock price is the public's perception of the value of the company. I just need to meet you, sir. Well, bloody jolly good there, Doc. All right, let's keep on going. What are we doing? Sorry if I missed it. My Wi-Fi cutting in and out. All right, Carlo. Bruno, you did well this week. Great. I'm starting on Monday, week 1. Cool beans. Where are you? I'm in Florida. Tootsie Roll. Ooh, Tootsie Roll is a relatively new company for Dividend Kings. Yeah, the dividends are horrible. Just saying. Anyway, let's finish up with Hershey's and show you. Yeah, thank you, Doc. WA. Okay, let me figure out. Show you how the math is actually done. Okay, we're buying it here, 96.68. We're selling the very next, the closest strike price, and the closest strike price is going to be 197.50. All right, so we take that price. That's the purchase price. This is the profit. Okay, we got to figure out how much we are losing or gaining. Actually, we're gaining. Cool beans. All right, so we're going to divide the 135 because that's our profit. That's what we're walking away with. 135, and we divide it by the purchase price. Okay, the purchase price at this moment in time is 196.68 divided by 196.68 comes to a grand total of 0.68%. That's less than 1%. It's less than 0.75%. But here's the thing. If the stock is above 197.50, which is this strike price here, okay, we're getting an additional 32.58, an additional 82 cents a share if it's above this price. Now what happens if she sells If I sell the 195, well, I'm collecting 275, but I'm losing $1.68. So I take $1.68 off of this, and I'm only walking away with one something. 168. Shit. 185. That about right? Yeah, I'm walking away with 185, which is less than 1%. Okay, so always about the numbers. What am I buying it for? Okay, what strike price am I selling? What premium am I collecting? And is that premium above 1% for this week? In this case, it's not. Okay, so Hershey's is going to be a no for this week. WA, what the heck is WA? What part of it? Sarasota. 86, good evening, dude. You're here. I didn't see you. Okay, didn't see you last night. Ivan, the 1% you talk about, is that the premium you receive by stock price? Sorry, I know you mentioned it. Okay, hold on. Jeff, from big tech cap stock, do you think is the best future growth for? Okay, you're under the impression that I actually categorize my stocks. I don't. Okay, so let's give you a quick breakdown of how I pick my stocks. We just did a search a couple seconds ago. There's 9,606 companies available to choose from every day. Some of them are going to share the profits, some of them aren't. Okay, I like companies that consistently increase their dividends. Those are the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, and then Warren Buffett's list. You get those 5 lists right there. You get over close to 300 companies that consistently increase their dividends and have weekly options. Okay? I don't categorize them any other way than the calendar. Okay, I throw them all into the calendar, and the calendar tells me exactly when each and every company pays their dividend. Ally Bank, Aon, DHI, Siri, Visa, Wells Fargo. Okay, Siri, Visa, and Wells Fargo. Well, Wells Fargo's a bank. Visa is a credit card company, and Sirius is a music company. Not music, but broadcasting, whatever. Okay, I'm looking pain. I think that may be lawyers or something. I really don't know. Moody's, T-Mobile, and Heinz Ketchup. Well, that's a huge difference between the two. T-Mobile is phone service, and KHC. Well, that's Heinz Ketchup, Heinz 57 sauce, Kraft macaroni and cheese. Those aren't even close to the same. But I'm trading them the exact same day because that's when they have their EX date. 86, you were here last night? All right, I must have been somewhere else. My eyes were foggy last night. I didn't get a really good look at everything. Anyway, let's keep on going. All right. Hopefully I'm answering the questions for you guys, but it's try not to make it more complicated than it needs to be. I mean, it was created for a 9-year-old little girl. I have found that adults have a tendency to make things confusing. Okay, it's simple. You find a good company that you like. That is the main one. Remember rule number 1. Never buy something you do not understand. If you give me a stock somewhere, I say, oh, I never heard of it. Harsh. Ivan. Kagdala. Alright. Let's keep on going. Oh, that's horrible. Charles, buy dividend stocks 2 weeks before the EX dividend date. Correct. Sell covered calls to collect okay, yeah, that's exactly right. Charles, you got it down. I mean, that's the quickest anyone's ever got it. Yeah, but Charles, you're correct. That's the strategy. You buy a good dividend stock 2 weeks before the EX date, and you sell a covered call against it. If the numbers are right. Okay, you're just talking about the numbers. You also have to look at the chart. Okay, where's the high? Right here. Where's the low? Right there. Well, what's it been doing for the last couple of weeks? The last couple of weeks will give you a good indication of where it's going next. Look, back here in July, floating around in the bottom, do some bottom fishing. Then she shoots up nicely, goes sideways a little bit, pulls back, now she's going sideways again. Okay, is that a clear cut direction? No, it's not as clear cut as Macy's is. Look at Macy's. Whoops. Okay, look at Macy's. Up, down, up, down. Well, now she's going up again. That's clear cut. You go up, down. It's like a seesaw. Remember the seesaws in elementary school? Up, down, down. They call them teeter-totters too. But they sitting on cash. Neil, I really don't pay much attention to that. 1.5 billion. Well, that's cool. That's nice. I like to be sitting on 1.5 billion. Supercar. Let's see how good this stuff is. Extra strength. Hopefully it works. How long do you have to own the stock to collect a dividend? 1 day, Howie. Chevrolet over on YouTube. Well, cool. Good for you. All right. PG Howie. All right. PG Howie, this is going to be for you. You ready? Okay. Here's a calendar. On the calendar, you see these little green dots? They all represent EX dates. Last day the stock trades before the dividend's paid out. Okay? So, hold on 1 second. So, there's 4 dates to remember when it comes to a dividend stock. Date number 1 is the announcement date. That's when the company tells you what the dividend's going to be and when they're going to pay it. Date number 2 is the EX dividend date. That's the last day the stock trades before the dividend's paid out. Each one of these little green dots represents an EX date, and they're all different companies. T-Mobile, Heinz Ketchup, Moody's, Heimlich and Payne, Kroger, Louisiana Pacific Railroad, Johnson & Johnson, UPS, Chevron, Apple, Capital One Finance, so on and so forth. ExxonMobil pop, yep, nice. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4 is the payment date. That is self-explanatory. That's when you get paid. So let's get back and take a look at some more stocks unless we have some more questions. All right. Do you sell after the dividends are paid out? Is this a short-term strategy? Charles, hold on 1 second. Let's go back to this calendar again. Let's pick on Louisiana Pacific Railroad, Louisiana LPX. Okay, let's not worry about the date at the moment. Okay, here's the EX date here. If I want to buy the stock, I'm going to look at it 2 weeks before the dividend date. 1, 2, on a Monday. Okay, I'm going to look at the stock. And if the chart tells me it's the right time to buy, if the numbers look right, if I'm making over my 1%, great. I'm going to buy it on a Monday. Let's say hypothetically it's $100. I collect my 1%. Great. Come Friday, right? Come Friday, the option expires. Now, depending on where the stock is it over? Is it above my purchase price? Or is it below my purchase price? If it is below my purchase price, I will keep the stock and I will do it again on the following Monday and collect another 1% premium. Okay? If it's not bought out on the Friday, I will carry it again and I will keep doing it over and over and over again until it hits my target price. But there's a few things you got to throw in there first. Number 1, never buy something you do not understand or you do not want to hold on to long term. Now, long term may be different for you than it is for me. The longest I've ever held anything is 9 months. Okay, now I've been investing for over 20 years. The longest I've ever held anything is 9 months. And I didn't do it because I wanted to. I know you never get the dividend. I'd prefer not to collect the dividend, Neil. I'd prefer not to. I would prefer to jump in on a Monday and be out on a Friday. If it doesn't work the first week, fine, I'll do it again. If it doesn't work the second week, fine, I'll do it again. I'll collect the dividend and keep going. But if I do it 2 weeks before the dividend, okay, if I do it 2 weeks before the dividend, right here, I will collect this premium, which is 1%. I will collect this premium, makes it 2%. I will collect this premium, now we're up 3%. I will collect the dividend, whatever that's going to be, and I will keep going and keep going and keep going until I hit that target. I have your divs, yeah. You know, it was funny. I was doing my weekly trading with my hold on, give me a second, with my Robinhood account. Now I got like 20 positions in Robinhood, so I'm looking at them, and I'm just rolling them over. I'm buying back the option, and I'm selling next week's option. Good. Roll, 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 roll. And I forgot where I was going with this part of the conversation. Yep, forgot what I was talking about. Don't get old. It ain't fun. What about Disney for next week? How long do you have to hold? I won't get the dividend. Yep, one. Do you sell the stock after the dividends are paid out? Is this a short-term strategy? Charles, it's kind of a short-term strategy with a long-term intent. Ooh, that sounded good. Just rolled right off the tongue. Short-term strategy with a long-term intent. What do I mean by that? Well, never buy a company you do not want to hold long-term. I didn't hit that last question. Gee, it is hard to understand you. Sorry, you know what? I have a set of microphones that I will have to find and charge so that they work. So we'll work on that for this coming weekend or maybe next week. So I forgot what I was saying. Alrighty, how long do I hold my collected dividends? I really prefer not to collect dividends. Oh, that's right. That's what I was going to say. I was saying I was going over my my Robinhood account. I do that every Friday. Because every Friday with Robinhood, you cannot let the options expire, because Robinhood will buy them back, and usually not as favorable if you do it yourself. So every Friday around 2 o'clock, I go into my Robinhood account, I buy back this option, and I roll it into the next week. Buy this one, roll it into the next week. So as I'm looking at that, as I'm scrolling down, I see, oh, I'm getting this much money from dividends from Ford. I said, oh, I forgot all about that. So I do collect dividends, not that I want to, but every once in a while, I will continue selling covered calls until it hits my target. Okay, every once in a while, I will collect dividends. It's not my major intention. It's just like a happy bonus. Charles, excellent question. That was a good question. All right, thanks 86 for figuring that out. The Bashna family. Oil. All right, Neil, you've been here long enough. You know I do not separate my stocks by not I was going to say indices, but that's not it. What is your take on Microsoft, which I understand selling cash secured puts on? Ooh, that's a good strategy. Believe it or not, it really is. Microsoft's a good company. They consistently increase their dividends every single year. Okay, MSFT. Now he's talking about selling cash secured puts. See, the one thing I don't like about YouTube is the question pops up and then it disappears real quick. For JBBK and K. Oh. All right. Now, what's my opinion on Microsoft? Well, let's take a look at the numbers. You do Brent. I have no idea what that means. So let's take a quick look at Wally World. Okay. At this moment in time, it looks as if Wally World should be a no. You tell me 6 months out. I don't think that far out. Sorry. So first thing I want to see when I look at Microsoft, the high, the low, where was it? Where is it? What direction is it going? Look at this area right here. This is this week. I want to zoom in onto that. Now, I like it because it's not at the high and it's not at the low. It's somewhere in between, and that's nice. So next, I want to take a look at the numbers. 416.79. The 417 is going for 435. Well, that's more than 1%. The 415, well, that can be more than 1%. Great. So it works there. Well, let's dive in a little deeper. A year ago, 325.41, it bottoms out at 308. and that was the end of September. Now from there, look at that. It's like a quadruple high. You see that? 1, 2, 3, 4 at 468. Well, let's take a look at the last 30 days, because the last 30 days gives me a better idea of where the stock is going next. Okay, what do I mean by that? Well, 30 days ago we're at 447. See, 447 30 days ago. We bottomed out here at 385. Well, that's a big drop. Okay, when you have profit taking like that, well, yeah, now it's low. People jumping in. But it looks like it's stalled out right here. Now it's coming back. So it looks as if it's coming back down again. Okay, so when you go from 385 to 425, well, that's a $40 increase. Some people might say, thank you for the profits. Have a nice day. Charles, he doesn't mind if he doesn't receive the dividends as long as he makes my 1%. Yeah, you're absolutely right, 86. As long as I make my 1% every week, I really honestly don't care about the dividend, and I really honestly don't care where the stock is going next. Because I'm looking at this twice a day. Except on Saturdays and Sundays, I don't look at it once. So I have a morning trading group that trades every morning, Monday, Tuesday, Wednesday, Thursday, at 9 a.m. And then Friday, which was today, we jumped in at 3 to figure out what our positions look like, the ones we bought on Monday. So next Monday coming up, which will be week number 9 for the quarter, or week number 35 for the year. Okay, once we look at those, we'll get a good idea of what we want to jump in on. Okay, what are we looking at? What is it giving me? And then on Friday, we'll figure out what to do again. So it goes Monday to Friday, Monday to Friday, Monday to Friday. I come from an age where we went to work at 8 o'clock in the morning on Monday. And then Friday at 4 o'clock, we got our paychecks. That's basically the exact same thing here. I jump in at 9 o'clock Monday morning. I pick a couple of stocks, and I do my podcast. I get a bunch of people that follow me, are actually working with me, and we're looking out for each other, make sure we're each trying to get that 1% per week and trying to stay as safe as possible. Then on Friday, we jump out at 3:30, 4 o'clock, somewhere in that area, to make sure our positions are good. Code Blue. Thanks for that. I don't know what it was, but thank you anyway. All right, let's go look at some more questions. Ford, can you do weekly options with them? Well, yeah, I love Ford. As a matter of fact, I did have Ford this week. Okay. Trying to log in. All right, maybe we'll be able to log in on that one. What does it mean? Shares called away same week. I'm a newbie. Charles, cool beans. Jeff, how do we join your trading group? Oh, Jeff, that's a cool question. You're over on YouTube, so it might be a little bit of a challenge. But if you go to the10minutetrader.com right here, hold on a second. It should pop up any moment. Okay, the10minutetrader.com. That right there, it says live trading online. Right there. You'll recognize it because it says simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern. I have committed myself to do this for the whole year. Okay, we are actually in the 23rd day of August. I missed 2 days. That was it. I was sick one day and I took someone to the emergency room the next day. All right, let's keep on going. All right, Charles, what does it mean shares called away the same week? Ooh, that's a good question. Let's go back to, Is that right? Did I click the right one? All right, give me 1 second. Whoops. It's not there. All right, it's not there. Alright, so we'll have to not do that one. Text message, there we go. Send me a text message. That works. Let's see if that worked. Alright, so that's reloading. We'll take a look at that one. Alright, let's go back. Ford. Oh, so anyway, Microsoft. Yeah, we're done with Microsoft. Let's jump on to Ford next. Take a look at the last 30 days for Ford. Okay, 30 days ago, look where we were at 14 bucks. Got this big gap down. Here's our bottom right here on the 5th of August. Look at that nice run up for the past 3 weeks. Huh. Well, I didn't want that. Nothing but going to the upside. So more than less, it's going to be an opportunity for profit taking come Monday or Tuesday. Look at that. 2 weeks to the top side. It's sitting at 11.27. So if I bought it at 11.27, sold the 11s, I get 33. Take 27 off of that. That means 5. Yep, that's not going to work. The 11.50s, yeah, not 1%. So I like Ford, don't get me wrong, but it's not paying 1% this week. Curtis, GFI. GFI. Oh, so anyway, Charles, I didn't finish your question. So hypothetically speaking, if I buy it at 11.27 and I sell off the 11.50s, means I'm selling the right for someone to buy it from me for more than I paid for it, and I collect a premium of 8 cents a share. It's not a huge amount. I like 1% or higher. In this instance, it's not. So what does it mean by being called away? If by next Friday the stock price is above the strike price in which I sold, then whoever bought that from me is going to buy the stocks from me, and I will be back into all cash the following Monday, which is perfectly okay by me. Okay, Curtis wants to look at GFI. GFI. Yeah, GFI is going to be a no, and the reason why, I think I said this many times, it is a monthly optionable stock, which means September, October, January, March, April. Yeah, that means I got to hold it for 4 weeks, and hopefully it'll go where I want it to go. Then I got to guess where is it going to be in 4 weeks. Yeah, I don't like monthlies. They do not pay the same as weeklies, and it's just not worth my time and effort to even mess with them. Alright, questions. Blue chip, as long as you held share 1 day before the EX date. Yep, you're right. CGC, NASDAQ, CGC. Canopy Growth. Never heard of them. Well, let's check and see how much dividends they pay out. That's always a shortcut. Right? Always a shortcut going right to find out CGC is, do they fit into this category? Well, no, they don't. There are no dividends in this selected time period. Now, I don't want to insult you in any way, but the title of the show is Dividend Investing for Weekly Cash Flow. If the company you want me to look at doesn't have any dividends, well, that just doesn't make any sense, right? So why are we looking at something that doesn't fit into the equation? So CGC, that's a no. All right, let's go to the next one. Charles, it takes time to understand how it works. It's really not that difficult. Charles, if you think of it this way, this was created for a 9-year-old little girl. Okay, I'm assuming you're above the age of 18 because that's one of the parameters in which you can be able to be on this platform. So if you're over the age of 18 and you can't get this, it's really not that difficult. Never pick a stock you do not want to hold long term. Make sure you understand what it is. I have no idea what CGC does. Okay? I know what Target does. I know what ExxonMobil does. I know what Phillips 66 does. I know what Wells Fargo does. I know what Microsoft does. I know what Dell does. I know what Nordstrom does. I know what Walgreens does. I know what all those companies do that I trade. Asking me to take a look at a company I've never heard of, okay, I have no idea what Canopy Growth Corporation does. Okay, so, and they don't have any dividends, so why am I looking at it? Hey, Ivan, you're right. He buys them 10 days prior to EX date. That's correct. Takes time. Yep, it's really not that difficult. Mars, I'm new. What are we investing in? Okay, Mars, this is investing in weekly cash flow optionable dividend stock companies. That's a mouthful. Okay, we're looking at good quality companies. We're looking to leverage them with a covered call, one of the safest trading strategies there is. You buy the stock, you sell a covered call against it, selling somebody the rights to buy it from you for the same price you paid for it, collect the premium, and if that premium is over 1% per week, that's what we're looking for. Safe, predictable, consistent 1% per week. If the share gets called away on the EX dividend date, do you still get the dividend? Nope. It's a good question. Okay, now that happened to me actually it happened to a bunch of people here. Okay, you have a dividend, okay, and then you sell an option against it, and it goes to a certain place, and somebody buys it from you just to scoop up those dividends, which is kind of okay, because what we're looking for is the premium, not really looking for the options. ENB. I looked at ENB earlier this afternoon, and it was a no then. 86. Bro, how'd you rerun coming up next week? How long have you been doing this? Oh, good question, Joe. Look at it, Simone. Simone, how are you today? I'm liking NYCB. Ooh, Trader Kev. We looked at NYCB earlier this year. NYCB. Okay, now we made a bunch of money on NYCB, and then we lost some money on NYCB. Everyone's different. Okay, I got 6 different accounts. I lost money on an NYCB in one account. I made money on NYCB in another account. Oh, okay. Spades player. What do you mean jump out every Friday at 3:30 p.m.? Oh, good question. Okay. What is it? That spades player? All right, spades player. What that basically means, all right? I buy stocks, good quality stocks with good dividends, okay, and good historical performance behind them. Okay, I like companies that have 20 years of increased dividends. What I do with them is I buy them on a Monday morning if the chart and the numbers all point in the same direction. Okay, now I've been doing this for a long time, mostly every single week it works. Okay, every once in a while I'll have a losing week. I think I had 1 losing week so far this year. Last year I had 3 losing weeks. But anyway, besides the point. Give me a second. Wow. What was the question? Oh, 3:30. Okay. All right. So we have 5 trading days a week: Monday, Tuesday, Wednesday, Thursday, Friday. Okay. If I'm buying all my stocks on Monday morning, then the stock market opens at 9:30 a.m. So if I buy all my stocks at 9:30 a.m. and then at 9:31 a.m. I sell all my options. Well, all those option premiums go into my account instantaneously. That money goes to me first thing Monday. Okay, so I invest all my money every Monday. So 98% of all my money is invested on a Monday. I will get 1% every Monday. And then by Friday, I have to close out those positions. Either let them expire, okay, or somebody buys them from me. So the reason I say we jump out on every Friday, because at 4 o'clock on Friday afternoon, all the weekly options expire. They don't really expire on Friday afternoon. It just so happens at 4 o'clock on Friday afternoon, you can't trade anymore. Boom on! What's happening? They don't expire until Saturday, but you can't trade after 4 o'clock on a Friday. So at 3 o'clock we jump on, okay, and then we start looking at everything. And then by 3:30 we're usually out of those positions and ready for next week. Okay. I wonder how many of these you're supposed to take a day? Because they always have those things. Don't take more than 10 a day. All right. Well, I'm going to hold off on the next one. It's kind of feeling okay for the moment. What do you mean? Okay, you need to own at least 100 shares of said company if you are selling calls. Ivan, you're absolutely 100% correct. 100 shares equals 1 contract. 500 shares, 5 contracts. 1,000 shares, 10 contracts, so on and so forth. Joey, what does rerun coming up with? All right, Trader Kev. Callable 25 and 27. Alrighty, well, I'm clueless, Trader Kev, what we're talking about. NYCB, okay, that's what we're looking at. Okay, a high of the year was 37.20, big drop. Okay, the low of the year, 475, that happened in March. But look at that movement. Isn't that nice? Look at it. Up, down, up, down, up, down, up. It's still on the way going to the upside before she turns around and comes back down again. That's if you like NYCB. Okay, now they did cut their dividends because they got in a little bit of trouble. They had to get bought out. So I'm not 100% happy with NYCB at the moment. What I sent is a donation. Just had a question though. Okay. If shares get called away on the EX dividend date, do you still get the dividend? I could have answered that question last year, but this year is a little different. Last year, the EX date was 1 day, and then the dividend date of record was the very next day. This year, they changed it. So let's go back. They changed it this year. Okay, announcement date 7/17. EX dividend date 8/27. Date of record 8/27. So now it's the exact same day. Last year you had to own it for 2 days. This year you have to own it for 1. So as long as you buy it before the EX date, you get the dividend. Now, if you own it and somebody buys it on the EX date, well, more than likely I can't answer that question because that one's never happened to me. Now, when somebody did that to me, they always bought it before the EX date. Okay, but buying it on the EX date, I don't know how that works. To be 100% honest with you, that's never been. That's the first time someone's answered that question. Ford, way too much debt. Okay. LUV, Simone, LUV. LUV. Southwest Airlines. Ooh, that's going to be a no for this week, Simone. The reason why it's going to be... Now, it's only going to be a no this week. I like Southwest Airlines, and I do buy it often. But at this moment in time, look at where it is. Okay, 30 days ago, there's our high. She dropped, and now we're at the 30-day high again. So, can it go higher? Well, it could. But you're thinking tomorrow or the next trading day is going to be a Monday. So if I buy it on a Monday, I'm looking for it to go up 5 more days. Well, look where the run-up is now. Okay, 1 week, 2 weeks, 3 weeks to the upside. I don't see it. Okay, if you look backwards, okay, up, down. And look at this, 1 week, 2 weeks, only 2 weeks to the upside. This one, 1 week, 2 weeks, only 2 weeks to the upside. So if you go back the whole year, it's never had 3 weeks to the upside. So you have here, 1 week, 2 weeks, 3 weeks. You're asking for a 4th week to the upside, more than likely it's going to be profit taking. Don't get me wrong, I like the company, I do. But at this moment in time, it looks like she's getting ready for profit taking, which means she should be coming down. So I'm going to put Southwest Airlines on the list for 2 weeks from today. LUV. Alright, so we're going to look at it in 2 weeks and see if it has come down from this profit. Okay, if there's profit taking, where's it going to be around here before it turns around and goes back up again. Simone, love take time, good balance sheet, more cash flow than debt. Alright, Kev, way to go. Code Blue, yes, as long as you hold the shares 1 day before the EX date. Cool. How long? Blah, blah, blah. I had to, I missed it. All these questions I missed. If shares get called away, yep, I talked that one. Okay, we already talked that one, that one. I had to leave the live. Did we go over CVS yet? I don't know. Did we do CVS yet? I don't know. CVS. Alright. Oh! First thing I want to see, the high, the low. Where was it? Where is it? What direction is it going? That's the first thing I always want to see. Next, I want to take a look at the numbers. 58.89. Well, what's the 59s going for? Ooh, nice. 69 cents. That's more than 1%. Now, that looks good. Let's take a look at this. I can get my 1% on CVS. CVS is almost every major city in the United States. Why not? Okay, we got to get our drugs somewhere. CVS, Walgreens, Walmart. There's other pharmacies out there. All right, CVS. Where does it look like it's going next? Well, that looks pretty, almost self-explanatory. Like 30 days ago at 58, jumped up to 64, drops down to 55. Now she's up to 59, pulled back a little bit. Is this going to the upside? Well, Monday and Tuesday will give us a better idea. Okay, now I like CVS. I just sold some CVS this week because I bought it last week, and now I've sold it this week. Joey, it's not my only strategy. It's not my only strategy either, but I like this one. Alright. Under what circumstances will this strategy lose money? Oh, Charles, that's a good question. Here's where I find most people lose money. They press the wrong button. It's exactly as silly, as insane as it sounds. They press the wrong button, or they pressed it at the wrong time. Now, when you do trades, you're always subjected to some kind of a risk. Okay, there's a risk of doing the trade. There's a risk of not doing the trade. Okay, so if you do the trade, yeah, you're risking whether you make money or not. If you don't do the trade, well, you're risking making money or not. There's going to be risk no matter where you go. Alright, so the idea is never buy something you do not understand. Make sure you go into it as if you want to hold on to it long term. Now, Charles, if you buy it if you buy it at 58.89, the closest strike price is going to be the 59. Okay, great. Well, if you sell the 59 and it fills, great. Well, you make money. Well, what happens if you sell the 53s? It's possible for you to hit 53 rather than 59. Or if you buy rather than sell. That's why I always tell people, read the orders out loud to make sure it sounds right. Because your eyes can deceive you. Now, I have done that many a times in the past. Remember, I've been training for 20 years. I have done it about, I don't really know, but it must have been over 6 to 10 times. Okay? And I actually did it once or twice this year. I made a mistake by hitting the wrong button. Alright. Oh! Let's keep on moving. Under what circumstance? Okay, yeah. So, Charles, by hitting the wrong button or doing the strategy incorrectly. Now, I usually tell people is paper trade for a while. Okay? download this trading platform, because Charles Schwab owns this now. You can download it free onto your computer. I don't get any compensation for that. They'll let you use it for free for a while, but then at one point they would like you to open up a trading account at Charles Schwab. Now, I like it. I've been using it for 20 years, and the commissions really aren't that bad. But that being said, just keep practicing. Practice, 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 and then when you're ready to throw real money in it, then do it after you get good at it. Don't just jump on in and do it. Should I buy Rolls? Should I buy Ford stock? Okay, Rolls, I can't give you that answer because I have no idea what your intentions are. I have no idea what your what's that word? What your goals or your dreams, what your risk factors are. I don't know anything at all about you, so I can't give you any advice on what you should do. Okay? Kevin Saunders, what program do you use on that screen? That, I just said, is Thinkorswim. You can go to thinkorswim.com and download it for free. Is there a time of year where options tend to be better? Nope. That was quick, wasn't it? Preferred. Trader Kev, I have no idea what you mean by preferred. TC, all right, thanks. 15 times asking now. Blueberry, what are you asking? Okay, Blueberry, you got to remember, I got 6 screens going. Okay, I got questions here, questions here, questions here, questions here, questions there. I can't see all the questions all the time. So every once in a while, you might have to repeat yourself. Joey, in what situation would you lose? We already talked about that one. If you keep rolling up in case stock goes down. Well, it's a numbers game. Trading success, futures. No, I don't do futures. AMAT, applied materials. Trading success, he does not do futures. Thank you, Blueberry. So 100 shares of Wells Fargo means one needs a minimum of 5,600 shares of Wells Fargo. No. Charles. 100 shares of Wells Fargo means you have one contract available to you. 5,600. Okay, minimum of $5,600. Oh, for Wells Fargo, yeah, probably. Party Springs, dude, I haven't seen or heard from you in a while. Okay, you were here a while ago. I haven't heard or seen you for a while. All right. So Charles, yeah, you need 100 shares in order to do one contract. So Wells Fargo, I'm not quite sure what number that is. Wells Fargo, yep, $5,600 to do 100 shares or one contract. But here's the thing. You know what? Just for the fun of it, Charles, let's do this real quick. All right? Wells Fargo. Here's the high. Here's the low. Here's where it was. Here's where it is. Here's the direction it's going. The current price, $56.75. The closest strike price is going to be 57. Just a smidge under 1%. But you know what? Let's use it as an example so Charles can understand how it's doing. And I'm actually going to do a practice trade. You ready? So I already decided I like the 56 of the 57s. All right, so let's do the 57s. Let's get this out of the way. Let's change this right here. Okay, where it says spread single. I want to click on that. And then I want to click on covered stock. So I'm actually going to do a covered call trade right now, so you can see how it works. And I'll do just 100 shares. Okay. Now 56.75. I like the 57s. The 57s are right here. See the 57s. And as I move my cursor over to these numbers, you see that little box that opens up? It says buy. Well, that's what I want to buy. If I come over here, it says sell. Well, I'm not selling, I'm buying. I'm buying a covered call. Okay, so 57 right there. Click on that. Okay, mine's automatically populated with 1,000 shares. So I'm going to change it to 100. So we'll do 100 shares, and we will do one contract. Okay, 100 shares, one contract. Now I'm going to change it from limit order to a market order. This way it opens up right away. That way I get to fill quicker. Alright, now I'm going to confirm and send. Once I hit confirm and send, I want to read it out loud because your eyes can deceive you. So as I am reading it, read it with me. Buy one covered Wells Fargo 100 Those are the weeklies. Okay, 30 August 24. Well, that's next Friday. The 57 call with the Wells Fargo strike, and with the Wells Fargo stock. To open. Well, it's 2 trades. I'm opening one, buying the stock. I am opening one, selling the option. Remember, stocks are traded in New York, options are traded in Chicago. Okay? My break even, 56.17. Well, right now it's at 56.75. So as long as she stays above 56.17, I'm going to make a profit. My maximum profit is only going to be $83 on this particular trade. So get my calculator out. Okay, got my calculator. Now, I want to take my maximum profit, $83, put it in there, and I want to divide it by my purchase price. My purchase price is the 56.75. Okay, 56.75. And that's going to give me a rate of return. That's not right. Let's clear that. $83. Okay, $83 divided by the purchase price, 5,617. 5,617. That comes to a grand total of 1.4% profit for the week. Okay, remember, the option expires on the 30th of August. Well, that's next Friday. Okay, so if I buy 100 shares, okay, buying 100 shares of, what the heck is this one? Okay, buying 100 shares of Wells Fargo, selling one 57 call strike against it, okay, my profit is going to be 1.47% for the week. That's where I'm getting my 1% from. Let's get out of all that stuff and get back to the single life. All right, PG Howie, raid, really? Raid? R-A-I-D. Raid! Oh no, raid! No options. Sorry, that's going to be a no. Felix, hey James, on your YouTube, don't see your top left picture. Oh my goodness, imagine that. Well, that's right, we don't. And there you have it. Okay, that should do. Hopefully that works. It's all a math debate whether to buy or not. GGZ. Okay, I'll agree with you. Why not? Uh-oh. Is it true this strategy does great in bull runs and not so otherwise? Well, Joey, you know, I get this question once in a while. Oh, okay, here we go. Now, Joey, what I'm doing now, I'm going into the 10-minute trader, which is my website. All these little dots right here represent all my social media. YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, blah, blah, blah. So if you go to the podcast, all right, you can go anywhere to find the podcast. Come on, let's open up. Okay, Dividend Stock Talk, that's me. Okay, there are over 900 episodes. Okay, of all the all the trades I've done. Over 900 episodes on what do you call it? You can get it on Spotify, Apple Podcast, Yahoo Podcast, whatever. That's not what I really wanted to show you. What I wanted to show you is this one right here. YouTube. Okay, so YouTube, we're going to look at videos and then the oldest videos. And we're going to click on this one. Where's my Remote. Okay.
Hi, I'm Tracy, and as you being part of my internet website club thingy, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of
Just one. January, February, March, that's 12. 12.
Okay, now the only reason I pulled this up was specifically for Joey, who says, does this trading strategy work great in a bull run, but not so much otherwise? Well, this strategy here, look, oh my goodness, I had so much hair back then. That was 12 years ago. Okay, so what's happened in the last 12 years? Well, we had the crash in 08. Not so much. Well, we've had a crash in 2021. Okay. But here, 12 years ago, doing the exact same thing. All right, so I've been doing it for a long time. As long as you're picking a good, decent company, whether the stock is going up or whether the stock is going down, everything should be just fine. Because here's the thing. Most of the companies I invest in have been around for over 100 years. So more often than not, these companies have seen quite a bit. Okay, you have Consolidated Edison. They've been paying dividends and increasing consistently for over 200 years. 200 years. General Electric, over 100 years old. Coca-Cola, over 140 years old. General Mills, Procter & Gamble, Colgate-Palmolive, Wells Fargo, Bank of America. There's so many companies that I invest in that are in business for over 100 years. Then consistently and still to this date consistently increased their dividends. Okay, what have we seen in the last 20, 30 years? The last 20, 30 years, we've seen a lot of crap. We've seen all the wars over in the Gulf. We've seen Iran, Iraq, Afghanistan, 08, the financial crisis, the pandemic, all this crap we've seen the last 20, 30 years. Yet these companies still increasing their dividends. What does that tell you? Well, it tells you that worst case scenario, even if the stock market goes down, these companies continue to increase their dividends because we need certain products. There's just no other way around it. We need gas, we need oil, we need toilet paper, we need toothbrushes, we need windshield wipers, we need spark plugs, we need tires. To make the world go round, we need certain things. That's what these companies do. And I only do companies that have consistently increased for over the last 20 years. Central Texas Cartel. Well, yeah. I trade Bank Mellon, Wells Fargo, Bank of America, Capital One Finance, and a bunch of others. Charles, yes, Schwab has free download to their website. Both desktop version and web version. Yeah, I would prefer the desktop version. Great job, 90 minutes, cool. Joey, if I say it loud, my wife will think I am covering up the call to my ex. It sounds like a personal problem there, Joey. Communication, you know. You should really read it's a good book. Men are from Mars, women are from Venus. Read the book, give it to your wife, and you'll figure out it's really not that difficult. I mean, we learned in elementary school, boys, girls, totally different. Women think certain things, men think certain things. Let's not get into that because that is a long conversation. Bad fish, what are we considering for next week? Ooh. Almost did Qualcomm today. QCOM. Well, why not? QCOM. Well, let's take a look and then tell me why you didn't do it. First thing I want to see, here's the high, here's the low, here's where it was, here's where it is. Look at that movement right there. Great. I like all that. Let's move over to the numbers. If I'm buying it, 173.79. The closest one's going to be the 174. They don't have it, the 175. Whoa! That's more than 1%. So is that more than 1%? Great. Well, I'm making my 1%. Wonderful. Now let's take a look at the chart. Is it the right time to buy QCOM? Well, a year ago we talked about it. 111. Bottomed out in October at 103.52. Here's the top right there, the middle of June, 230.63. Now from 230.63, look at the drop. Well, went from 230 down to 150. That's an $80 drop. Well, you think a company going down $80, well, yeah, that's going to be bottom fishers. Okay, what are bottom fishers? Those are people looking for companies that have big drops, and they jump in them. And what they call this, now, forgive the term, but they call this the dead cat bounce. Don't get me wrong, I didn't come up with the phrase, but when you have a big drop, okay, when you have a big drop like this, okay, from here all the way down to here, well, it's going to bounce. They just happen to call it dead cat bounce. I know it's kind of gross, but it is what it is. All right, so last 30 days. Okay, here's your 30-day high right there. Drop down. Now she's slowly going to the upside. But look, now she's evening out, going sideways. Well, what's going to happen next? Really don't know. Okay, but what does the numbers look like? The 173.50, the 172.50 is paying for 415. Well, that's well over 1%. Getting close to a 2% mark if you like Qualcomm. Almost did Qualcomm. Okay. What website app? Snow Queen. Well, Snow Queen, how are you today, My Majesty? This here behind me, it is called Think or Swim. It's not a website. It's not an app. It is a trading platform through Charles Schwab. Alright, that's not working as good as the Super Call did. Alright. Charles, the WFC, Wells Fargo example, I didn't get what happens next Friday. I get the premium 1.5 if the option expires. Nope, not at all, Charles. Let's take a look at it again. Wells Fargo. WFC. Okay, at this current in time, take a look at Wells Fargo. Here's our high right there. Here's our bottom. Moving to the upside. Great. What's the current price? 56.75. The 57 is going to 52. Not quite 1%, but it's kind of close. So here's the thing. If I buy the stock first thing Monday morning, I sell someone the rights to buy it from me at 57 cents, under $57. Or the 56s, whichever one I prefer, whichever one the numbers look better for me. Okay? When Friday comes along, if the stock is above my strike price, I will be back to cash. Okay, that means the following Monday I have all my cash back, and this premium goes into my account the very same instance that I sell it. So if I buy the stock on Monday morning and I sell the option on Monday morning, I will get the money from the option into my account Monday morning. Now the stock that I bought is tied up until Friday afternoon at 4 o'clock. Okay, so basically I buy the stock, I sell the option. Now I can't do anything with that stock until that option expires. Now 23 August, well, that's today. Anything that has 23 August on it expires today. 30 August 24, that's next Friday. So all of these options here, all these strike prices are going to expire next Friday. So whoever bought them or sold them has to figure out what they're going to do between Monday and Friday. Are they going to exercise it? Going to let it expire? Are they going to roll it? It all depends on the numbers. What happens to the stock price? Does it go up? Does it go down? Wherever you jump in, okay, 56.75, if I jump in 56.75, that's always going to be my number unless I dollar cost average down. How's Kohl's look this week? What if the option does not expire? All options expire, Charles. Okay? 30 August 24. Every single one of these options are going to expire next Friday. 23 August. See these? All of these expired today. Look at the numbers. 1 penny, 1 penny, 1 penny, 1 penny, 1 penny, 1 penny. 0, 0, 0, 0, 0. This is out of the money. These are all in the money. So look at the next week. In the money, nice value to them. Out of the money, they still have value. These have no value because they expired. These do have value because they don't expire until next Friday. Oh, my throat's getting sore. All right, bad fish. We just did QCOM. Thanks, balls. That was a great explanation. Cool. Glad you like it. QCOM doesn't do windshield wiper blades. Yes, I know, but GPC does. GPC, Genuine Parts Corporation. They have a dividend king. Been paying for quite the while. Andrea wants to look at DuPont, huh? Cool beans. DuPont. Interesting. It looks like it's going to be a no, kiddo, but we'll take a gander at it. First thing I want to see, the high, the low, where was it, where is it? Look at right here. We're at a 30-day high right there. And it's kind of high up. So 81.46. The 82s, get rid of those are worthless. The 82s are 20 cents. It's not even worth looking at. Okay? See, the chart's kind of okay. Kind of. Because I'm a little concerned about this right up here. But this right here, if I'm buying it at 81.46, the 82 is going for 20 cents. Yeah, I'm going to say no. Sorry, the numbers just don't work. JP Morgan. Ooh. JPM. Who came up with that one? Central Texas Cartel. Okay, JP Morgan's going to be a no. Okay? It's at the high of the year. Sorry, so I wouldn't look at JP Morgan for another 3 weeks. Look where it is. Ain't no way she's coming back down here in 2 weeks. I'd say 3 weeks. JPM. Alright, so JP Morgan's written down for 3 weeks. Will come visit us again. Okay, so no, don't get me wrong. I like JP Morgan. I really do. The numbers are kind of okay too. But she's at a high of the year. So what am I waiting for? I'm waiting for it to come back down to reality, because you don't make your money buying high and waiting for it to go higher. You make your money in the stock market buying it low and waiting for it to go higher. See? Low, went up, low, went up, low, went up. I look for the low and then you jump in. How much do you invest weekly and how much do you pull out as profit? Interesting question there, Kevin. That deserves to go back to here. Okay. Here's the 3 accounts I'm looking at. I don't know how to get rid of that stupid crap right there. But account right here, account number 1. Okay, currently has 142,000 in it. I've already taken out almost 30,000 so far this year, because I take money out every week. And I average, well, right now at this moment, I'm close to 50% for the year. I'm only into August, and I haven't added up the last 3 weeks yet. But as of 3 weeks ago, it's at 46%. Account number 2 is at about 167 now. That's up 69% so far. Account number 3, it's up 31,000. Okay, and that's only been here for about a month or 2. Little different strategies. But yeah, all my trades are right here. You can actually see what my trades are. Okay, this one here, 1.13%. Well, Wynn, AEO, MPW, Kohl's, Walgreens, Bitto, Macy's, Okay, those are all the trades. They're all posted online for you to see. You don't have to believe me if you don't want to. You can do your own research. What I kind of insist you doing on your own research. All right, next. Central Texas, J.P. Morgan was my favorite. Well, don't get me wrong, J.P. Morgan's a good company. However, I'm not buying at the high of the year. That's me. If you want to buy at the high of the year, hey, more power to you. Okay? But I've been in this game long enough, I don't ever buy at the high of the year. I buy it at the 30-day low. Because what's going to happen? Eventually, someone who bought it down here at 190 saying, wait a minute, it's at 218. That's like a $30 increase. Hell yeah, I'm going to take that. Everybody's different. I like taking profits when they're there because it's not a profit until you take it. And nobody ever went broke taking profits. Kevin, you want to look at the Qs? Can I say no now? Or do you want me to actually show you why I'd say no? Okay, I'll show you why. Okay, a couple of reasons. Reason number one, it's out of my price range, personally. Reason number two, here's your last 30 days. Okay, here's your 30-day high, your previous 30-day high. She drops down here. Look at this run up. 1 week, 2 weeks, 3 weeks, and yesterday and today a little bit of profit taking. Yeah, it's on its way down. No, thank you. But worse than that, let's take a look at Yahoo Finance and put the Qs into Yahoo Finance. 1, 2, 3. Now, let's take a look at all the dividends the Qs has to offer. Okay, let's go back 20 years. All right, let's stop. All right, not even 20 years. Okay, here's 20 years. All right, in 2005, it was 4 cents. Okay, then it went to 3, to 5, to 3, to 5, to 3, to 4, to 4, to 7, to 5, to 9, to 11, to 8, to 12, to 10, 16, to 5, 14, 11, 20, 37, 16, 22, 24, 27, 37, 21, 25, 24. Do you see what I'm looking at? These are the Qs. These are the dividends that the Qs are paying. No consistency whatsoever. Up, down, up, down, up, down. Well, let's take a look at Microsoft as a comparison. Okay. 16, well, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, consistently increasing year after year after year. But wait, I'm not done with the Qs. Okay, let's take a look at the summary for the Qs. Well, right at this moment in time, I can buy the Qs at $480 a share. All right, Ernie, $480 a share. Well, what is my current rate of return with the Qs? Well, with the Qs, your current rate of return, 0.61. 0.61. Are you reading it properly? 0.61. That's just a little bit above 0.5%. For the year, not for a week, not for a month, not for the quarter, but for the year. So you're investing all your money at $474 per share, and they're only paying out 0.61% yield. That's horrible. What the hell are you thinking? Seriously, Ernie, think about it. Do some research. This is your money we're talking about. Okay? Nobody else has more interest in your money than you. Look at this. We're at Friday. All right. 86. Charles, you keep your premium, receive, blah, blah, blah. Charles, why the need to buy dividend stocks? Why not just sell covered calls? Oh, well, Charles, that's a good question. So the question is, why dividend stocks? Why not just do covered calls? Well, what are you going to do covered calls on? And in the companies you do the covered calls on, how do you know when or if they're going to go up? The reason why I use dividend stocks, okay? The reason why I use dividend stocks, number one, okay, they consistently increase their dividends, which means I know that they're consistently profitable. That being said, if the stock goes down, absolute worst case scenario, I got a company where I'm consistently getting higher and higher dividends. That's one reason. The second reason is you see these little green dots? They represent the EX days. Now, stocks have a tendency to go up in value before the dividends. Okay? Every 90 days, Johnson & Johnson, I believe this is week number 9. Okay, week number 9 of the quarter. So quarter 1, Johnson & Johnson, week 9. Quarter 2, Johnson & Johnson, week 9. Quarter 3, Johnson & Johnson, week 9, so on and so forth. Every 90 days, it pays a dividend. Every single company. Now, if a company consistently increases in value every 90 days before the dividend is paid out, that's an indicator that tells me, well, this is the time to buy this stock if everything else is aligned. So, Charles, that's why I look at dividend stocks, because it tells me if I want to get money this week here, well, T-Mobile, Heinz Ketchup, Johnson & Johnson. Okay, that's just one list. If I go to my other lists, okay, this is another list of mine. Chevron, UPS, Wynn Resorts, PSX, Phillips Petroleum, Archer Daniels, MPC. Oh shit, what is MPC? I don't know what MPC is. Marathon Petroleum, MPC. Okay, Marathon, which is Marathon Oil, Marathon Petroleum, Target, KGC, Kellogg's. Is that right? CMI. So this week I have all these companies to choose from this particular list. Now I know they're going to increase in value 2 weeks before, so I want to buy them on the 5th. All these companies I'm going to look at on the 5th. Whichever ones I like. Now remember, I only pick like 2 or 3 or 4 stocks a week. That's it. So I have 3, 4, 8, 10 from this list on that week. I got some more from this list. And then what do I have from Warren Buffett's list? Well, I got those 4 from Warren Buffett's list. So I'm looking at anywhere between 5 and 30 different companies every single week. Week after week after week. This trading strategy is boring, it's repetitive, it's monotonous. And it only gets 1% per week. Now, if you're okay with 50% per year, yeah, it's going to take a little bit of effort. I'm going to look at these stocks and find out which one is the best for that week. Next week, I'll take a look at these. Which one is the best? Okay, then I'll look at those. Which one is the best for that week? I don't look at every single stock every single week. Well, there's a few of them I do that consistently pay. So those are the reasons why I look at those. How about U.S. Steel? Andrea, U.S. Steel, nice pick. U.S. Steel. All right, first thing I want to see. High, low, where was it? Where is it? Where is it going? Oh, it looks like it's dropping. Okay, good. It's an uptrend, but right now it's dropping. Okay, 37.29. That's the current price right now. 37.29. The 37s are, there's no number there. For the 37.50s are 52 cents. Well, that's a nice premium right there. Let's take a closer look. The low of the year was a year ago, 29.88. At the end of the year, 50.37. Okay? Last 90 days, that's the last 3 months. Look at that movement. Down, up, down, up, down, up, down. Okay, where do you think it's going to go next? Okay, as soon as it finds its bottom, it's going to turn around and go back up again. I like U.S. Steel. Kevin Saunders, my favorite 5 stocks. Macy's, Nordstrom's, Kohl's, Bank of America, and Nordstrom's. I like those. 86. So it's the endless stake of keeping premiums. Something is still over my head. Oh boy. Charles, I'm not 100% sure what's over your head. It's a simple strategy. Remember, it's created for a 9-year-old. Rule number 1. You like retail? Okay, Howie, KPG Howie, you're new here. I don't separate my companies that way. Endless streak. Endless streak. You could kind of say that because it's the same companies over and over and over and over again. Okay? We could go over here. Hold on a second. See if this gives you kind of an idea. Okay? Here's a list of all the stocks in this one particular list. Remember, I have a bunch of different lists. But alphabetically, AIG, AMGN, ANF, APA, APC, ATVI, AVP, AXP, B. Okay, so I can actually go through some of them. AIG, insurance company, AMGN, that's, I don't know how they do. Apache, American Express, Boeing, Bank of America, Baxter, Bed Bath and Beyond, no, Best Buy, so on and so forth. Okay, but these are all the companies on one particular list I have. They all have consistently increased their dividends. So every single week, I'm looking at a whole fresh new set of stocks. But it's the exact same ones. There's 13 weeks. Week number 1 in the first week of the quarter is the same as week number 1 in the second quarter, which is the exact same as week number 1 in the third quarter, which is the exact same as week number 1 in the fourth quarter. It just continually rotates. Alrighty, we got 20 minutes left. I have no questions, so let's go on to the next stock on the list. Ooh, check it out. LUV, which is Southwest Airlines. LUV. First thing I always want to see, high, low, where was it, where is it going? It can end up being a no for this week. Look at that right there. I don't really have to go in any further. Okay, just zoom in. Look at that. She's at the current high of 30-day time period. So LUV, we already wrote it down 2 weeks from today, because I'm giving it about 2 weeks to go from here to come back down to here. Okay? So that was LUV. Next on the list, Siri. Ooh, I bought some Siri this morning. 320. Okay? High, low, where was it, where is it, what direction is it going? What other strategies do you use? Well, Kevin, I only trade one strategy here. Okay, now, think about this for a second. Okay, the strategy I'm teaching you at this moment, it is simple, it is safe, predictable, consistent, and no way to lose. It was created for a 9-year-old little girl. Now, number 1, rule, never buy something you do not understand. 2, never sell at a loss. It defeats the purpose. 3, make sure each and every company is consistently profitable. Me, I like 20 consecutive years of profits. 4, weekly options are a must. I want weekly cash flow. The only way I'm going to get that safely and predictably is weekly options. 5, make sure the numbers work. What am I buying it for? What am I selling? What am I collecting? And is the chart telling me it's right? It's very simple. Adults have a tendency to make it more complicated. What the hell was that? So, you only buy in for a week. Well, preferably. Okay, preferably yes. Okay, now there's some companies I hold longer than I want to. Now this year I held 3M for 11 weeks. I held AEO for 4 months, which didn't throw me at all. I still have Win, and we're into 3.5 months for Win, but almost everything else has been for a week or 2 weeks or 3 weeks. That's it. All right, Siri. Let's take a look at Siri. The numbers 321. The threes are going for 18 cents, not quite there, but look at the 350s. Okay, the 350s are going for 4 cents. That's over 1%. Granted, it's only 4 cents a share, but 4 cents a share on a $3 stock, that's over 1%. That's what we're looking for. Yeah, Marie, you're absolutely 100% correct. But you got to remember, I have 6 different accounts. So I didn't say I bought Siri in any one of these accounts I share with you. I just let you know that I bought some Siri today. And here's something else you don't know. Every once in a while, right, I collect dividends I didn't know were there, because I don't really pay much attention to the dividends because it's not a primary objective for me. If I collect them, great. Every once in a while, I'll open up my account and it'll say, you have money to spend. And I said, okay, what can I buy? Well, Siri's at $3. Well, hell yeah, let's load up on some of those. Nope, that's the answer to that question. All right, so that's Siri. The last couple of days, last 30 days precisely. Okay, see if we can see a pattern here. 30 days ago was the high at $4.10. Drops down here to that 280. Up, down, up, down, up. Now she's coming back down again. From the looks of it. Is that guaranteed? No, it's not guaranteed. It just looks that way. Okay, so what does it normally do this time of year? So for that, we take a look at the seasonality chart. Now, if you don't know what a seasonality chart is, to my far left is January 1st. Far right, December 31st. So that's the whole year. Okay, the blue line represents the movement for this year. So from January 1st to where we are now, she dropped, retraced, came back down. We're sitting right here now. The red line represents 10 years of average movement. So what has it done in the last 10 years? I want to take a look at this area here because this is the end of August, the beginning of September, which is where we are now. We're going into week number 9 next week. So I click on the blue line, drag right, and this is the next 2 weeks. Okay, as you can clearly see, she's going to go up a little bit, and then she's going to pull back down a little bit. Okay, no big moves, which is kind of okay. All right, so let's go back, and what is next on the list? All right, Siri. Okay, we looked at Siri. Ooh, Clorox, CLX, another company that's over 100 years old. CLX. All right, that's going to be a no. Don't even have to go any further. Hit the high of the year today. Yeah, no thanks. Now, I like Clorox, so what I'm going to do is I'm going to put Clorox down for 3 weeks from today. CLX. Okay, because there's the high. I want to come back down to this area a little bit. Look, this gap is going to fill eventually. So it's telling me not this week. And I didn't even look at the numbers yet. Okay, that's why I always want to look at the chart first. The chart's telling me it's the high of the year. No thanks. Okay, you're going to make your money buying low, selling high. Buying low, sell high. Not buying high, waiting for it to go higher. It's all elementary, common sense. One of those things they just don't teach anymore. Travis, wouldn't selling for a small loss and reinvesting be more profitable than holding on for months? You know, I have this conversation with several people on a consistent basis, and I don't know. I haven't tested it. It sounds, hypothetically, it sounds right, but if I buy it at 153 and she drops and I sell it at a loss, well, how long is it going to take me to recoup that loss at 1% per week? I would prefer not selling it and just selling a lower option to get me a higher price, you know, a consistent cash flow coming in. Okay, I don't make 1% every single week. Some weeks I make less than 1%. Some weeks I make more than 3 or 4%. It all varies out. You know what? Really quickly, let's take a quick gander. Quick gander. Okay? All right. Week 18, okay, week 18, 2.6. Week 19, 1.24. Oh, perfect example. Week 20, 0.71. See, I don't make 1% every single week. It averages out to 1%. Week 21, 1.2. Ooh, week 22, 0.6. Good, 0.6 in this account. We have Intel, Marathon, Win, Kohl's, MPW. Okay, we made 0.6 that week. But look at right here. The very same week with a different account. Lowe's, Paramount, Win, Gap, Kohl's, Marathon, MPW, Bitto, and AEO. Well, it just happened to make 8.7. So I make 8.7 in this account and only 0.6 in this account. The exact same week. So sometimes I make 1% every week, sometimes I don't. New here, Lobo. What program are you buying or selling on? All right, Lobo, this is, whoops, let's go back to it. This is Think or Swim, offered by Charles Schwab. I do not get compensated by you guys doing that. What did you do to make a living before this? Oh, Kevin, I had a manufacturing company. Believe it or not, I was a CEO. I had 26 employees at one time, and I made artificial coral reefs for museums, aquariums, and rich people. Okay? So everybody has to do something. Uh-oh. 11:30. I'm not going to have any more of that crap. I'm done for the night. Throat's killing me. So, any more questions? We can be done for the day. It is Friday. Not a whole heck of a lot happens on Friday because we'll be looking at the exact same thing again tomorrow night and then probably again on Sunday night. So, that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for a ride for that safe, predictable, consistent 1% per week. You guys have a great day, and we will catch you again tomorrow. Oh, Lobo, thank you for that. That was very nice of you. Doesn't the cost of trades, contracts, cut significantly into your trade profits? E-steamroller. No. Okay, ask a question, get an answer. Let's go back here for a second. Account statement. Profit and loss year to date. Account summary. Whoops, account summary. Okay, so liquidation of 40% right here. Total commissions and fees 2,600. Okay, so I'm up almost 40,000. The 2,600 is my commissions. So sometimes yes, sometimes no. Thoughts about Halliburton? Okay, Blue Coat. We did Halliburton earlier today. If you think about it, ask me again tomorrow. But we're done for the night. You guys down here, I forget all about you. Why does I always forget about you guys? Sorry about that, you guys down here on YouTube. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable, consistent 1% per week. You guys have a great night, and we will see you